friends, this is Martin from Secret, the channel for learning about trading and investing, and welcome to a brand new episode of Markets Tomorrow, where we look at what happened in the markets today and then try to analyze it properly to make a better trade plan for the next day. Right. So what happened in the markets today? Markets bounced back. Right. It was consecutive bearish days that we had seen, and it bounced back today. Will it sustain? We will see that. We'll analyze and see what we can derive out of our analysis. Right. So if you're not subscribed, please subscribe and share to your friends and colleagues who will get benefits. So we will now, as we do it every day, the pre-market analysis we'll do for the Wednesday, November 24, 2021, and we'll look at all of these parameters on the charts. We will have additional data analysis on open interest, volatility, institutional participation, and then sectoral watch and so on, global commodities and global markets. And then we'll wrap up with some actions, right? So for wasting time, let's deep dive. So here's the chart. Look at the bounce. Look at the candle. It's not as big as the fall, but a decent wide range candle, you can say, right? 0.5% up, green close after 5 red candles. Right? That 5 red candles brought down market 5% of the previous high. Right? From here you had 5 days of fall and then the first green after that. Here you had 5 days of fall after the doji green. Right? So that's what we're talking about. Right? So intraday, what happened is this: it just dipped 1%, then shot up 2%, and then gave a little bit. The same here. It dipped huge. It's not clear how much points, but yeah, it shot back 700 points. It dipped 600 points and shot back 700 points. Right? We have 1% down and 1% up on Nifty. BANKNIFTY, right? 1% down and then same 2% up. Right? This is what happened actually. It was very volatile. You can see that volatile movement can be seen that way. Look at the dip here after the recovery. After this big bounce back, then sudden dip, right? That around maybe some 50 points. Right? Just 150-minute candle. So again moving up, forming kind of doji, and then it was highly volatile but trending up. With very volatile trending up. That's intraday action. So volatility, if you look at the Bollinger Bands, you can see that it has lost the support. It has already expanded on both sides, and it is on the bearish side. The price is moving and it's walking on the bands, but today the bearishness has halted and it has turned to the way. Otherwise, volatility expansions on the bearish side. And here also volatility has expanded much more wider, and then it's on the bearish side. But today, as a contrary, market has bounced. Whether it can bounce or whether it will sustain, time will later, tomorrow later, we'll come to know. There's no way to understand that, but it's a bounce. Definitely it's a bounce, and it is closed above I made the previous swing low which it had broken. It closed above, just conquered the 7500 level, and the DMA it crossed the Fibonacci 38 from the very recent swing also. So overall it has taken the bounce is decent, right? So whether it will sustain something will be very much. Support resistance of now, if you see, first support will be 750 from where it bounce, 200 to 50, that means, and if that is gone, then 17,000 is going to happen, right? And if that is gone, then you have a 16,900 levels, actually 38 retracement from the last major swing. And gap support is there at 16,600, 750 downside. Upside resistance is at 17,600 levels first, then 17,800 levels, and 18,000 levels. And above that, 18,100, 200, and then 18,400 and 18,600. It's the upside resistance of Nifty. BANKNIFTY, if you see, it has taken a support 36,900, 37,000. 37 was disclosed above that, so that's a support. So 37 would be a support, and then 37, 300 to 500, 300, 400. That level is where the rest was resistance. And upside, then 37,800, then 38,000, then 38,500, then 9,000 and 39,500, and then 42,000 and 41,000, and then 41,800, and that is how it goes. The upside resistances, right? So immediate resistance that it has to take away is 37,300. Then 37,800 has to be conquered. Then 38,000 has to be conquered. Okay, then you can say that it is sustainable. What is the value we already seen? Momentum divergence, you can see that. See, momentum, this is the worry. Although the price is bounced, the reason why we're not sure is because the momentum is still in the bearish zones below 40. Momentum is still in the bearish zones below 40 on both indices. And also, if in case it faces resistance tomorrow and then dips further, means it's a range shift phenomenon in the momentum. RSI moment has a range shift phenomenon where it confirms the moment and resisting at a bearish zone, and then it is dipping the down, means it is further big bearishness. Both cases, but here this is very close. So tomorrow what we have to see is whether it is getting to the sideways zones, whether it is able to have a momentum above 40 and sustain above that is what matters. Right? That may be clear by tomorrow or maybe 1 or 2 days. Never know that. That is the reason why, in spite of having the bounce back clearly seen, we are not sure whether it will sustain or not because momentum is in the bearish zones. No major drivers. So trend indicators still remain. There is another reason. The ADX trend is still in the bearish zone in the short term. This is a daily. MACD also it's in the edge. And also you can see that today also the green, the strength of the trend is rising up. It means the bearishness is increasing. Today also it increases. And on the higher time frame weekly, although the week is yet to complete, weekly also if you see it is on the edge of a crossover to the bearish zone. So medium term momentum also may get lost. Okay? So the trend is and the momentum is back. All the price action shows a pops still back. Okay? Volatility again further to today it shot up to 19 kind of levels, or 14% or something. It shot up and then it settled in 3% rise and it settled around 18. IB is 14.6 as per the obstruct. IBP is below 30, so that may decrease the premiums. It was 40 at some point in time, a few weeks back. Yes. From there it is 35 other day, then again fall down. So VIX had only had shot up and then finally gave up that. That's what happened today. And it's still 3% up. So VIX is trying to find, it is moved from it shot up from the 15 and then it covered the full span almost, right? And now we don't know whether it will be falling down again towards the 15. That means market can short up, right? And then so this kind of range confirmation is what has happened yesterday and today. Open interest analysis, if you see, overall tomorrow is Wednesday, 1 day before the expiry. So overall left Nifty, right Bank Nifty. You can see that it's a bearish chart that you see, graph that you are seeing here, right? Your call rating is dominating. So what is the highest call rating on Nifty? 18,000 and 17,800. 18,000 huge resistance. 800 is where the market may be heading if it is moving up from 7,500 where it is right now. 7,500 seems to be having good put rating, right? But equal amount of so strategies may be formed here. Equal amount of put and call rating is there at the 7,500 levels and 17,000. If this loses the grip of 7,500, right? If it cannot further move down, and again as this bearish is happening, means it's going to hit the 17,000. So exactly as the chart is saying, here also the same thing. So Bank Nifty 37,000, 36,500 is where the maximum put rating, and then call rating is in 38,500, and then 39,500. So the two places where the maximum call rating is. So the bearishness is not that much today to 0.67 is there. It seems to be some bounce on the put call ratio also. Here also 0.72, some bounce. Today our futures are a long bit up because of the big up move. Sectoral performance, if you see, almost all the sectors close green. So hammer close, small slight one, but momentum is still sideways. Metal 3.3%, but short term momentum is still sideways. So wait. Put up 0.5 open, percentage up, but short-term momentum is still sideways. Pharma 2% up, but still short-term momentum is still up. FMCG 0.5% up, still momentum is sideways, so we gave it a wait. Reality also 2% up, but short-term momentum is here. So overall, the price is shown a reversal green and close, but the momentum has to catch up before we can be sure it will sustain or not. So we have to wait, and it's kind of wait and watch. Is what the sector performs is saying as of now. But yeah, biggest move has happened in reality in the metal, right? And the pharma also side 2% each, right? So institutional participation, if you see, so you can see that today also Fyers had sold, and only because of the DIF buying of 1,400 crore, the market survived. That's what the data shows. We will just quickly recheck, revalidate if that data is appearing here also. So domestic institutions November 23rd sold, so that is true. So today we had big sell-off that happened in the market. Right, I was just having doubtful because of the green close. So the morning fall might have been the Fyers selling, and after that DIs and retailers bought. Right, that must be what must have happened today. Remember the previous 2 days also DI is buying heavy, but Fyers are heavily selling off. So already in this month, 18,000 crores selling has happened. Only 13,000 has been compensated by the DIs and the retailers first. So this is remaining a worry that Fyers selling. Right? Now dollar index, and if you see it shooting up and the dollar is strengthening like anything, its impact was seen on the currency pair USD INR also. It's this attempting to once again take off the roof, trend line channel, and then go to the next upside. So this is also not good, where the dollar is strengthening and the rupee is weakening further. Right. Now crude oil is cooled off, which is always good thing about something that happened last week. So it has been falling, and it has taken a support, and now it is not falling further below that. Right. It's already at the 75, 76 kind of levels, and it's not ready to fall further down. Right. But some cool off has happened, and the momentum seems to be in the consolidation mode right now. The gold has fallen off after it attempted to break out of this resistance and taken a support from where it had shot up earlier. For some reason, dollar is strengthening, so that may be the reason why gold is fallen off. Right. So, but otherwise, gold is bullish. It's a cup and handle weekly pattern that is in progress. And US markets is showing slight red and green and mixture of everything. It's not clear. No big moves are seen anywhere. So as I say every day, if there is a big movement happens in the US markets overnight, next step in market we see that it will most likely reflect in the SGX, and the exchange also big move is that obviously it will reflect in the our market, but not small moves in the SGX. When today we had a very small move that was indicated in the morning PreMarket, so that we thought it may close green, the autumn green, but it opened the red and then it bounced back and then shot up. So SGX can be believed only if there is a big move that is seen, 100 point plus of move. Now action was to Apple has broken out of 52-week high and also a previous resistance, and momentum has picked up. Volumes are huge. There is some fundamental news also that is there. Trend is also good. So this can be a swing trade with this. The candle below this has the stop loss. Right. The next one is Power Grid Corporation. There is also a trend line channel with momentum that is picked up. Keep tight stop losses since the market is very volatile, and there is some space for it to hit the channel top once again. So that may be the swing trade that is left with momentum, volumes, and the trend indicators are saying it's bullish. Now just to wrap up, it's bearishness again. Even though we had a great bounce that happened today, and my view is bearish, short term for tomorrow, because the overall momentum is at a point where it is indecisive, right? Bearishness is still there in the Bollinger Bands and all chart patterns. Overall, if you see, it has been bearishness has not finished yet in the charts as such, and the momentum drop, trend drop, short term, and institutional selling. These are all the concerns why I am. Mild is because a good amount of correction of 7% will happen. and a closure of 17,500 may be possible for the monthly expiry, right? And it is at a support zone, the bounce has already happened. The only thing is it has to sustain. So that's why it is mild bearishness. But however, the bias is kind of cautious bearishness. No, it cannot be bullish for unless the momentum trend catches up. Definitely. Now this last two paragraphs of repetition, it's a volatility range that the VIX range is forming between 15 and 90. It bottomed out yesterday at 15 and then bounced from there 18% up and then again shot up today near to 19 levels. And that shows that there is a chance that it can main road back to 50 probably. But if it is above 20, you have to be very cautious. That means there is severe bearishness that is there. Fear and greed index is shooting above, you have to be very above 20, you have to be very careful. But if it main roads back to 15 levels, then we know that the range is again getting reconfirmed, right? But so expect volatility and choppiness at this range, right? Always go for naked, go for vertical splits or counter splits to gain from the Vega. Vertical splits to have defined risk or any strategies like and corner, right? This all defines your risk well, and you will not have unlimited loss in case of freak trades or big volatile choppy moves or sudden dips or gap ups and all these things. You can get yourself protection from the option strategies. So apply that. It's a repetition that I do every day. So that's my view. Overall, my bearishness. But if there is a possibility that it can sustain, the bounce can sustain further. But the all the supports it had broken now would lack severe resistance effect. Right? We are also refer back to the resistance support zones and mark it on your charts, and then whenever it reaches accordingly you have to take the decisions how to whether to go long or short or exit or trail. So it depends on the support resistance that we have marked in the previous slide. So I hope it helps you to frame your own view for tomorrow and your own trade plan. If it helps you in some way and you like it, consider hitting the like button and share to friends and colleagues. We have very few subscriptions, so please encourage us to keep doing this. Share it to your friends and bring more subscribers into our channel. Thank you so much for watching. Happy trading. Happy New Year. Bye.